Hello, everybody. Howard Lindzon, and I'm joined today with a new member of Team Stocktwits, Michele Steele. I can hear the applause raining down from Chicago. You are a new member of Team Stocktwits and my sidekick partner on the expansion of our Degenerate economy show and content. So welcome aboard. This is exciting for me to team up with a professional. Usually it's just me and a bunch of people that don't know. Well, we still don't know how to use the equipment here at my office, but it's
Howard,
exciting.
you're a pro's pro. Don't sell yourself short there.
I am a pro's pro at being an amateur. I think they say that it's like non-important to take it too seriously, and we've taken that part very seriously. And what matters here is that we have good content. Now I have somebody professional helping me steer myself and stay on topic. So this is really exciting. Obviously, in being at Stocktwits this long, I have a lot of ideas around content and strategy. And as you know, the sportification of the markets, everything's become a bet in this degenerate economy. And so it's fun at Stocktwits because we have this core audience of millions of users, but now we have this ability to go beyond these millions of users as the idea of sports and bets and sportification, as you would call it, of financial media and the financial markets is happening.
Yeah. You mentioned not taking yourself too seriously, but you certainly do take the content seriously and you take markets very seriously as well. But your approach, being irreverent, being someone who can talk comfortably and conversationally about these markets, and just one of the biggest stories of our time is where the economy is now, where the degenerate economy is now, where the markets are right now. We're at a huge inflection point. We're going to look back 20, 30 years from now at a market that is markedly different and in the process of changing significantly. And I can't wait to get into all of those issues with you. But I'm really happy to be aboard. Thank you so much for the welcome. Stocktwits is a new company for me, for sure. But covering the markets and talking about enterprise and talking about innovation, certainly, it is not new for me. I started out my career. A lot of people don't know this. Me and Tom Brady actually started out Merrill Lynch. He was an intern as well, just not at the Board of Trade alongside me. That might have been interesting in Chicago. And the broker that I worked for didn't go to college. He just had an appetite for risk, right? And that's what you need to win. And from there, I went to a business show based in Chicago. It was a nationally syndicated business show called First Business. And that brought me to New York. I worked for Forbes, launched a streaming service there, went to Bloomberg TV, covered the markets, the real-time financial collapse. I would like to know where you were during subprime. I was on yeah.
I was typing my blog, yelling at, I thought Goldman was the devil, and it turns out maybe Silicon Valley is the devil. We'll see.
I'll let you be the judge of that. After Bloomberg TV, I went to ESPN. Definitely a little bit of a pivot, but they knew they overheard me perhaps talking to all the traders on the floor of the New York Stock Exchange. Half the time it'd be about stocks, and half the time it would be about the Mets. And so they knew that I was a sports fan as well. And so when the opportunity arose to cover sports, thanks to Tiger Woods of all people, covered the Masters, and it turned into a real beat for me, a real sports beat and a sports business beat. And at ESPN, when you cover enough NFL and NBA, Howard, you're covering the billionaires. It is a billionaire beat that you're talking about. And I've been lucky enough to witness some of the biggest stories in sports over my career at ESPN. I've seen the category grow to be a true alternative asset class for certain people, for certain investors. And you're right. You talked about the sportification of the markets. I saw the financialization of sports, whether that's private equity coming to college. It's coming. The University of Michigan and USC don't want it in the Big Ten. It is absolutely coming. I think fractional ownership of teams is coming. Sports betting, we've seen absolutely explode. I think Polymarket and Kalshi are waiting in the wings, even more so once Polymarket's available in the United States, to be available to sports fans. And We've got the same exchanges, Howard, that I worked so closely with in Chicago, the CBOE, and specifically the Merck, that are now putting out products for sports fans. Now, SIBO says they're not going to put out predictive markets for sports fans. This is just for events. But the Merck absolutely is partnering with FanDuel and putting out events for sports fans. So we're seeing the sportification of financial markets and the financialization of sports markets. And I was straddling the two. So I'm excited to be here at Stocktwits, and I'm excited to build.
Well, the third thing I would say is the Robinhood era, which I was a part of. Well, yeah, the Yahoo Finance, the Yahoo message board era, then the crash. Then you had no one believing in the FinTwit, Stocktwits real-time thing because it was too fresh in people's minds, the Yahoo message board 6-7 years later. Then Robinhood didn't come until 2013, 2014. No one believed, right? Everybody was, no, trading's bad.
Yeah.
And then it was confetti. You should go to jail for confetti. And here we are just, 11 years after Robinhood really got started, that you have all of this melding together. And why the CBOE and CME, they're part of my Degenerate index, but why they're so interesting right now in ICE investing in poly market is they missed, even though they benefited from the Robinhood era, they didn't participate in it directly because they probably didn't believe, right? Like they didn't need it. They thought it was a toy. And now they can't afford to miss the next toy. So they're all in on poly market and Kalshi, which has kind of changed the game. Whereas Robinhood kind of snuck up on everybody and no one really even believed, even after GameStop, like Robinhood was just trading at cash value. Polymarket and Kalshi are baby companies with very small revenues and very small amount of customers. And yet the valuations are staggering compared to like Web 2. So I think the most important thing is these huge financial companies that kind of missed Web 2 and dismissed it are all in. No, we don't know if that's good or bad, but they're all in. They can't miss this one. And that's what makes this kind of, the meshing of sports, finance, betting, the fractionalization, it all becomes one kind of soup bowl. And that's super exciting.
Yeah, absolutely. It's not just for the exchanges, right? It's not just about institutional money anymore. The retail investor really is carrying some of these markets in some circumstances. And I think there's a parallel with the media play here for Stocktwits as well. In the same way that you're seeing a little bit, democratization of markets, more access for retail investors, whether you're talking about sort of traditional public markets or these predictive markets, with media and what we're doing right now, viewers don't have to look on channel 400 for us. They are going to access us the same way they would access ESPN or CNBC. It's going to be on this. And so I love that we are seeing this all access to so many more people and getting these insights to so many more people. And I think there's a lot of runway in front of us.